I want to bring in Peter Kraus right now, Chairman and CEO of Aperture Investors and a long-suffering banker. Can I say that? Or you're
Sure.
A former banker? Do you consider yourself a banker, Peter? You just heard what Wilf.
Once a banker, always a banker.
Always a banker. Okay, so give us your analysis of those numbers. You heard, on the trading side, they're killing it, and I imagine you're going to see that at the other banks, including your former bank, Goldman Sachs. I don't know. Does that mean that you want to own those banks? And separately, the credit card data was pretty interesting, given that it came in worse than expected, given what seemed to be the strength of the consumer at the moment.
Now, look, I think we expected trading income to be pretty robust, and it turned out to be the case. That's not surprising. We had an enormously fast-moving, very active market over the last 3 months. So you would expect trading revenues to be good. And they're probably a little bit better than what people expected. But then the question is that trading revenue really sustainable? And you're going to see that going into the future. And that's where the consumer income is actually more predictive of what we might actually see in the next 3 months to 6 months. Look, the weakness in the credit cards, again, I'm not surprised by that. I think we still haven't seen any losses of any significance. Now, JP Morgan's provisions are up and they're sizable, but we really haven't seen an increase in delinquency. And that's mostly because of the stimulus that's been out in the marketplace that the government's provided. And what I think is really difficult to ascertain, and I'll be very interested to hear what the CEOs say, is what is going to happen in the next 2 quarters to those losses, because unemployment, while it has gotten better, is still not low, and the COVID issues still remain. And there's every reason to believe there's more stimulus, but not at the size that we've seen in the last 3 months. And so I think that there's, the challenge, which Will said, the challenge is really what's going to happen in the consumer area, and how does that flow through to other businesses that rely on consumption, which is 70 some odd % of the U.S. economy. So, I think the trading stuff is good, but the question is that level sustainable? And the real issue to me is, what does consumers say?
But on the consumer side, the other component that Wilf mentioned, and I've been looking at these numbers, is that the AUM piece on the assets, the asset management piece is up. And so what does that say to you right now?
That's the market. That's the market. You mark down the assets as of the end of the first quarter. Remember, March 23rd was the low. And so all the equity assets were down 30 some odd %. Maybe they had come back a little bit from the bottom, but now you're just witnessing a 40, 50% run in equities. And if you took that out, I think that's what that really means. Now that of course has a wealth effect. And so people may spend some of that wealth, but we're still not above where we started the year, or the high we were at the year. The market's more stable, but I don't think that's going to change people's spending. The savings rates are higher. People are saving a lot. And I think that is reflective of the fact that they're concerned about what's going to happen to them in the next 6 to 9 months.